All right, welcome back to Robinhood Stock Market Watchlist group. This is our live training meeting that we do every Sunday. My name is Carlos. I'm the creator and administrator of our Facebook group. And we always like to go over the advanced basics as just kind of going back to the basics in case if anybody's ever struggling. It's just always nice to always know what those are and to make sure that we always master everything, because a lot of times, our emotions can sometimes get the best of us, and sometimes we just need to take a deep breath or just a step back and just and rethink things, especially with a week that we just had in the last week being very bearish, which throughout our meetings that we've had in the last several weeks, we knew that this was going to happen. We were prepared for it, and we were I'm hoping that most of us were able to profit tremendously from it. Talking over this weekend, I know a lot of you guys did very, very well in the last week. I've seen a lot of gains, 50%, 100%. I mean, that's amazing. That's what we're looking for. That's our goal. But like I said, sometimes we always have to make sure that we don't get distracted. We always got to stay focused every single week, and that's why we have these meetings. And so always going to the basics. So the first hour of our meeting is always on the basics, and then after the first hour, we'll just plan ahead. We'll look at what the week is going to look like by looking at certain economic reports and earning reports and certain other activities. So if you're watching this as a recorded video, you can always just kind of skip ahead just past 1 hour, usually just a couple minutes after that. So the most important thing that any investor or trader must master, no matter if you're a long-term investor, a short-term investor, or a swing trader, day trader, or whatever that it is, if you're into crypto, moving averages is the most important thing to analyze these algorithms. It really helps provide us these buying and selling signals. Without them, we're just throwing money at something, hoping that it sticks. And so I'm going to pull up a video that kind of explains what moving averages is and how we can utilize that for our advantage. And so give me a moment here while I pull that up.
The moving average is one of the most commonly used technical indicators. If you've spent even a little time looking at price charts, you will have noticed that most often the price of an instrument will move up and down. In fast-moving markets, you may find that the price may be surging up only to plummet moments later before surging up again, increasing the potential for false signals. The moving average can help filter out the noise from random price movements and smooth it out in order to see the average value. Moving averages are used to identify trends and confirm reversals. When the price is above the moving average line, we consider the instrument to be in an uptrend. Conversely, if the price is below the moving average line, we consider it to be in a downtrend. The breaking of the moving average line usually implies a trend reversal. Moving averages are also used to identify areas of support and resistance. Many traders will consider the moving average line as a support and resistance level indicator and base trades on it. So traders will check to see whether the price is going towards the moving average and see whether it will bounce back from it or break it, as with regular support and resistance level. Oftentimes, the price of an instrument will find support at the moving average line when the trend is up, and will find resistance at the moving average line when the trend is down. So moving averages will tell you whether an instrument is trending up, down, or if it's ranging. It can tell you if a trend is still in motion and whether it is reversing or losing momentum. Have in mind that a moving average is based on past prices and is known as a lagging indicator. Therefore, it will not warn you in advance, but it will confirm when a trend change has taken place. At the most basic level, when the price crosses up and over the moving average, traders take this as a signal to buy. When it crosses down under the moving average line, they consider it a signal to sell. Let's take a look at the types of moving averages. There are three main types: simple, weighted, and exponential. We will discuss the simple moving average, or SMA, first and show you how it's calculated so that you can adjust it according to the given market circumstance. So if you wanted to plot a 10-day simple moving average, you would add the closing prices of the last 10 days and divide by 10. This calculation gives equal weight to each day. It's called a moving average as the oldest price is dropped each time a new period becomes available. In this way, ensuring that the average is based only on the last X number of periods, in our example for the last 10 days. Have in mind that the longer the simple moving average period, the more it lags and the slower it is to react to the most recent price movement. And this brings us to its downside. As equal weight is given to all periods considered in the calculation, the simple moving average is slower to respond to rapid price changes that might prove to be important. So how can you counter this? With another type of moving average, either a weighted or an exponential moving average. The weighted and exponential moving averages are calculated differently from one another, but both types give more weight to recent periods and thus more emphasis on what traders are doing at the moment. So as a result, weighted and exponential moving averages respond faster to price action by distributing more weight to recent periods and less to older periods. They reflect a quicker shift in sentiment, which can be due to changes in supply and demand or important news events that impact the traded instrument. To illustrate what we mean, if you were to plot an exponential moving average and a simple moving average on a chart, you will see that the exponential moving average is closer to the current price than the simple moving average. Apart from the type of moving average, you also have to decide on the time period. This will largely depend on the type of trend you are analyzing. Here are some guidelines for commonly used time periods: 10 to 20 for short-term trends, 50 for mid-term, and 200 for long-term trends are typically used. When and how should you use moving averages? Deciding which moving average to use and the time period will depend largely on your objective. Use exponential moving averages for shorter time frames, or if you're analyzing a fast-moving market, as you'd have more emphasis on the latest prices. Use simple moving averages if you are planning on holding a position for a longer period of time, as the exponential moving average might be too sensitive and give false signals. You should also use simple moving averages if you'd just like to filter out the noise from random price fluctuations to determine the overall market direction. Thank you for watching this tutorial on moving averages.
All right, let me see if I can find a part on here. I wanted to I'll show you right here. Hold on. Where is it? Right here. This is a very, very important image. We have to remind ourselves about the moving averages. We have to stay focused, and because it is a system that is providing us these buying and selling signals, it's not going to point exactly highlight like this in black and white, sell or buy, but it does do that in a form of a communication. You just have to be able to configure certain settings so that way it can communicate with you based off of your preference and your style of investing and trading. And so these buying and selling signals are huge. It helps provide us information on a trending direction. And we can use more than one moving average. I use 3, which I'll show you here in a little bit. But also, if you're into stock options, you can reverse the strategy with calls and puts. So where a normal sell signal would be to sell a stock, or maybe to sell a call, would be a signal to buy a put. So you have to be able to really adapt to different situations, to maximize your profits and to minimize your losses. And so let's switch over to Webull really quick, and I'll show you kind of how you can kind of configure these settings according to your style and trading. So
Carlos, can you also talk about the false breakouts when you get a chance to, please?
Yeah, and that's one of the things that we need, that as a trader or investor, we have to be able to prevent a lot of false breakouts. That way, it just depends on your style of investing and trading. So if you're more of a long-term investor, because I use the EMA indicator for the moving average because it is more reactive to price changes. So that way I can be more responsive to the price changes, so that way I can buy or sell a little quicker than it would be more lagging behind, a little more slower, which is what a long-term or short-term investor would want. They would want less signals, because if there were more, that would be considered a false breakout, because they don't want to keep buying and selling, they want to hold. So a way to prevent that, because right now we're looking at the EMA moving average, the EMA, and I have my settings set for 5, 10, and 20. So this represents a 5-day moving average or 1 week. The 10 means 10-day moving average or 10 trading days moving average or 2 weeks. And then the 20 represents 20 trading days or 4 weeks or 1 month. And so that's where we get these types of algorithms, because it's all based off of the the lagging price based on the moving averages and whatnot. But these are part of our system that we need to adapt with, if you're not already, to provide us these signals. Now, to configure these to your style, is you would need to hover over or click on your moving average indicator, and then you can pick and choose which one that you would want by clicking on the gearbox looking icon. Once you click on that, the indicator settings will come on, and then you can click on one of these main charts for your primary moving average. And then over to the right, you have your lengths. You have your 5, 10, 20, 30, 60, 120, and those are all by default, but you can configure them any way that you want. And then we have style right here. As you click on that, you can change the colors to your preference, or maybe if you're, like I said, colorblind, you can change it to different colors that you can see a lot better. But you can click and unclick a lot of these here to really change. Like right now, I'll change it to 30, 60, 120, which would be more of a long-term investor preference for their settings, and then they would click done. And now you can see there's a lot less buying and selling signals. In fact, there is no really a really good firm sell signal. It's basically saying, hold on, just wait. The last sell signal would be when the when the 3 moving average lines crosses over each other, and when the price line crosses down. So this is what helped prevent a false signal, telling the long-term or maybe short-term investor, just hold on. I know you're worried, I know you're scared, but just hold on for a moment. And then it got really close right here, but it never made it through and crossed over. So it never provided a solid sell signal. And that's where you can really change and modify these according to your style and preference in trading and investing. And you'll see that a lot of times I'll use the lines instead of candles. You'll see a lot of people, they'll post screenshots with candles. I don't like using candles. If I right click on here on this Webull desktop application, you can download their website for free. You can click on candles there, and then you'll see all these candles that'll pop up. Well, the candles do provide some volume information, but it provides me the same information down here, so I don't need to repeat it over again. Plus, when you're looking at it, it looks kind of fuzzy anyways, and it looks like it could be a little distracting. I need to see exactly what's going on. I need that out of the way, so that way I can see exactly clear. This is like 20/20 vision. It's like, this is such a relief. And so the second most used indicator is called the MACD. This is both of these moving average indicators are the most commonly used by successful investors and traders. So if they're using that and you're not using it yet, you got to start. And able to get different results, you have to try something different. Otherwise, you're going to get the same results if you do the same thing. And so another thing is, the more you learn, the more you're going to earn. So we've got to learn something new if you're not doing this already. So, looking at Apple here with my normal indicators, it looks like Apple's getting ready to maybe provide a sell signal. You can see that the price line is now starting to cut through. So far, it's cut through 2 of the moving average lines. Now, to me, the having 3 moving average lines is like a certain risk level. So as it goes down, the first line could mean that that there's a 25% chance it could keep going down, but there's a 75% chance it could keep going up. Once it touches the second line, that means there's a 50% chance it can keep going down and a 50% chance it can keep going up. Once it touches the third line, then that pretty much means that there's a 75% chance it's going to keep going down and a 25% chance it may bounce off of it and then go up the other direction. But once the moving average lines, all 3 of them crosses over each other, that's usually a pretty major confirmation that the trending direction is now going the other direction. Temporarily, don't know for how long or for how far until further notice, but we have to be able to identify these signals, and as well as the MACD. So the MACD is basically 2 moving average lines. One's a little faster, the other one's a little slower, but we have to be able to use it as well. Maybe side by side. Sometimes the MACD can provide us some signals, maybe a little sooner or a little later. So, but especially when they happen at the same time, it's like where all the stars are starting to align, And so these colored bars underneath the MACD lines here are the gap distance bars. Showing us a gap distance between the 2 moving average lines. So if the moving average lines are closer together, then they'll be the bars are going to be a little smaller. Or if the moving average lines are now at the opposite, then you'll see that the color will be different, and then you'll see the gap bars there. So that just kind of lets you know like how much momentum that it pretty much has going in that direction. But once you see that the 2 moving average lines are now crossing over each other, we have a real kind of a red little area here. Basically means that the 2 lines have already crossed over each other, and so it's letting us know that we expect more bearish activity soon to come. It would be this week, next week. So this is but then again, bad news is great news. It all depends on how we use it. And so in this case, playing stock options, we can now bet against stocks, buying puts, bet against this. And while the stocks go down, our accounts are going to go up like tremendously, like 10 times the amount, if not more or less. And so this is going to be a great volatile week. That it just depends on how you play. And so but moving averages, like I said, is a huge key to each individual investor's and trader's success, no matter what type of strategy that you use, whether it's long-term, short-term, or whatnot. So let's go into the second video, and then I'll answer any questions that you may have. Give me a moment while I pull that up here for you.
We will now build on material covered in the first tutorial on moving averages, where we defined what a moving average is, the 3 types of moving averages, and how they are calculated. In this second tutorial, we will discuss how to use moving averages to identify the direction of a trend, how they can be used to enter and exit a trade, and finally, how to trade moving average crossovers. To determine the direction of a trend using a moving average, you must take into account the set time period. We touched on this briefly in the last video, where we showed you the most commonly used time periods when analyzing short-term, mid-term and long-term trends. But why is it important to be aware of the time period of the moving average? In this chart, when we place a 20-period simple moving average by clicking the indicator icon and setting the time period to 20, we can clearly see that it indicates an uptrend. Yet when we place a 60-period simple moving average in the same way, we see that it shows the price in a range with no clear upward or downward trend. The difference in the direction of the trend portrayed by the moving average is due to the time period. Shorter period moving averages are faster at generating signals, and changes in the price of the instrument will be reflected more quickly. The longer period moving average will react to price changes much more slowly, but will generally provide more reliable trading signals. As a trader, moving averages will help you decide which way to trade by looking at whether the price is above or below the moving average line. In this chart, the price is above the moving average line and acts as support. You could buy and enter a long position when the price pulls back to the moving average line. You could then place your stop loss underneath the moving average. Here we can see the opposite. The price is below the moving average and acts as resistance. You could then enter a sell order when the price retraces to the moving average line and place your stop loss above the moving average. The interesting thing about moving averages is that they can be used alone or in combination with other moving averages. So when you place two moving averages on one chart with different periods reflecting a short-term and a longer-term trend in price, you have the opportunity to trade moving average crossovers. They can be used to determine when a trend has changed direction. Let's show you what we mean. On a daily chart for the pound US dollar, we will now place a 10-period simple moving average and a 20-period simple moving average. When a shorter period moving average crosses above a longer period moving average, it can signal that the trend is changing direction to the upside and it may be a good time to buy. When a shorter period moving average crosses below a longer period moving average, this is considered bearish, a signal that the trend may be changing towards the downside and it may be a good time to sell. No matter which two time periods you use, this principle will remain the same. To recap, a moving average is a lagging indicator that can help filter out the noise from random price movements to see the average value. It can help identify the trend direction, determine support and resistance levels, and can help confirm a trend reversal when looking at moving average crossovers. It is important to understand the differences between the types of moving averages and how to tailor the time period to best fit the trend being followed in order to gain the maximum benefit from this indicator. Thank you for watching this tutorial on moving averages.
Okay, I wanted to point something out somewhere here because it is a little technical and advanced, but I do get asked this often. Let's see. Yeah, you're buying signals. So, like stop loss, moving average, where you could, if you're holding something and the stock goes up, your stop loss would basically be the moving average price. In case if it reaches at least one of them, even if it's the lowest one, that's got to be your stop loss. So I mean that, you know, and you can, if you're one of those that like to put in a setting, you know, in case if you weren't watching the market and you had it just in case, you can put in a like a stop loss order in your application in case if it reaches that, to automatically sell it just in case. That way you can, you know, maintain a stop loss, or what's also called a trailing stop loss. So even if it's going up and you're maintaining profit, you can change that trailing stop loss order, so that way in case if it does, you know, get to a certain point, that you just have the system automatically sell it for you. So it's your assistant there just waiting for you to tell it, you know, a certain command. So that's another one. But also there's the downside. So in many cases, so where if you're either holding a stock or a call, or maybe even a put, you know, every situation may be a little different. But if in case if you like forgot to sell, you know, and you're holding Just know that usually it'll always bounce, even though it's downtrending. Usually it'll bounce. It'll touch the moving average again, and then that can be your point where you can sell. And even though it's going down, or if you're looking to buy a put and maybe you missed the boat, that's okay. It's better late than never. The best time to buy the put as it's going down is when it touches the moving average again. And so, as long as it do that, remember, with puts, you have to buy high and you sell low. It may seem weird if you're not used to it already, but that is how you try not to miss the boat. You're maximizing your gains and minimizing your losses, and up until then the price line cuts through the moving average lines, then it provides you the other signal to begin to start selling your puts, secure your gains, and just keep repeating the process. So it just takes a little time to get used to, but this is really, really critical stuff to learn and to master. And I highly recommend either watching these videos every day on YouTube, but also to practice it on your favorite application. And I know when I discovered moving averages, I used to feel like I didn't need moving averages. I just needed the Robinhood app, and beginner's luck comes around, but then it fades after a while, and then you start kind of so moving averages is easily something that you can practice. And when I discovered it, I wanted to practice it like every day, even when the stock market wasn't open. But how do you do that? And so over time, I just kind of figured out that with my capabilities, I can day trade cryptocurrency. I can either use the graphs on Webull, I can trade crypto on Robinhood or whatever. And so with crypto, you have unlimited day trades. It's available 24/7. You can trade $1, $10, $100, $1,000, whatever. And so you still have the same kind of moving averages. You can just kind of select different types, just depending on what type of crypto that you're looking at. And so here's our daily. And so for Bitcoin, but same thing. There's a buy signal here, and then there's your sell signal. It's gone all the way down. It has not yet provided a buy signal yet, so we're kind of waiting on that. So that's just the system, and every successful investor and trader uses this. So it's just really, really important. Anybody have any questions about moving averages? Does everything make sense? Feel free to unmute your mic or on the setting, or you can chat in the chat room.
Hey Carlos, so for day trade, what was the time frame?
Now, somebody in the chat room mentioned, can you give an example of how to set up a stop loss on the Robinhood? I don't have I don't have my Robinhood app hooked up to this Zoom thing, so I wouldn't be able to really do that. But if you go to your Robinhood app, when you go to sell something, there's usually like a setting feature or an icon, usually in the top corner somewhere. You would click on that. Now we can customize your order. You can do it like a stop price. That way you can trigger a limit order if the ask price falls to that stop price. Or you can also do it good until canceled, which will expire in 90 days rather than the end of today. So just if you go to that, you'll be able to see it, and it's really easy to miss it. So it's just a little tiny, like a gearbox icon that you click on. Once you click on trade, then sell, and then within your selling configurations where you would configure your limit price and market price, all that stuff, just click on the gearbox and you should see a bunch of available features there. Any other questions? Everything makes sense? Okay, so next thing that we'll lead to is patterns. I'm gonna pull up a little chart on that. Patterns is really important to really important to know, because it can provide also very important information. But like I said, moving averages is always number one. Let's always stick with moving averages no matter what. But patterns can also provide you clues on what the stock price may do, but you still have to listen to your moving averages to wait until it provides you your buying and selling signals. But the moving averages the patterns will help provide you information of what most likely the stock price is going to go. However, the stock price in the stock market can easily be manipulated by news or and other events, especially international events. And so and that's why there's always a stop for a stop loss, or providing an indication that the strategy has now become invalid. So we have bullish patterns and we have bearish patterns. So these particular ones here on the top are the bearish patterns. So we're just going to use a couple of these as an example. So the top left is the double top pattern. And typically we'll see these patterns usually throughout the day using the 1 minute chart or the 5 minute chart or whatever. But you can also find patterns using the daily chart. So if you're a long-term investor or a short-term investor, you can spot these. You just have to kind of imagine a square box line around the price line to try to identify whether there might be a pattern there or not, and then refer to this cheat sheet just to see if if it is a pattern. Maybe it's a double top, it could be the head and shoulders, just depends on where the price line is. And so but typically you'll find a lot of these throughout the day using the 1 minute, 5 minute chart. So if the stock market opens up, usually after 5 minutes, whether the stock market's down or up, the stock price usually kind of gets pumped up a little bit. There's a lot of volume, a lot of volatility the first few minutes after the stock market opens. So stock price usually tends to kind of shoot up a little bit, and after 5 minutes it kind of hesitates there on the top, and in the next 5 minutes it begins to kind of fall down a little bit right here and forms this little neckline now. And then the next 5 minutes it starts to hesitate, but then bounces back up right here, about the same high point as the last point right here. And so, but then it begins to hesitate, and it's been about 15 minutes, and then 15 minutes you start to notice that the volume is starting to lose a little bit of momentum, and then all of a sudden the price begins to fall down, but then it's starting to hesitate right here, right around the neckline. So this is obviously, it's the double top pattern at that point, and then we have an entry point right here, meaning that this is a good point to enter. If you start getting, entering, buying puts on this, betting against the stock, because it's telling you that the price is going to go down. Unless if you're holding calls or puts, it's time to let it go, because the stock is going to go down. Don't know for how far, for how long, because it can easily redo a new algorithm, a new pattern, and whatnot. So, but at this temporarily, that's the target area where you're going to want to sell. So you get in, get out when you start to identify these patterns. And again, the moving averages lines will help you provide these signals of when to get in and out. You just have to listen and wait and be patient. And then we'll have bullish patterns, especially like the bullish pennant, which seems to be very common here on the top right area, or on the right side, where the stock price begins to shoot up after in the morning, 5 minutes after the stock market opens, and then it kind of zigzags like this and forms a little funnel looking thing, which is called the pennant. Well, then it's been about 15 minutes at this point. And at this point, a lot of people don't know, is it going to, that it could go down or up. And then a lot of times investors, especially new investors, begin to sell because they're not aware of this pattern. And so they start to sell, and then all of a sudden, boom, it shoots right up. And they're like, how in the world did it just do that? It looked like it was going to go down. So you sold, then it goes up, and it's like, man, I could have made another 5, 10, 20, 50% or whatever. And so, but we just have to be aware of this. However, we have a stop loss. So in case if the price line fell on that stop line, that is, if you're already holding, that is your stop loss. It's time to get out. Don't hold anymore, because something has manipulated the entire stock market, like what we're going to see a lot of with this whole Omicron variant, news and everything. So that there's a lot of things that can easily affect every single stock at the same time, and that's when we see like every stock will have the same algorithm. They'll look the same. And so that is when, okay, we have to abort that, or if we're not already holding, it becomes invalid. So the stop is the invalid, abort, focus on something else, or just wait and hold on. And so, but most of the time, it always goes towards its intended direction. And once it hits the target area, according to your sell signal, is when you want to sell, because you don't want to sell too early, because now you're just leaving money on the table. And we want to maximize our profits, minimize our losses. And so we have to wait, be patient until it provides us the signal of when to sell. Now, there's going to be some patterns here in the bottom where they are a bilateral pattern, where they could be either or, but that's why it's really important to really make sure that you're getting the same angles right, like the symmetrical triangle here in the bottom right. This one, a lot of times I would normally see these with penny stocks. When I mastered penny stocks many years ago, I had to wake up really early in the morning during pre-market, because that's a lot of times when a lot of activity happens with penny stocks. And a lot of times penny stocks are biopharmaceutical stocks, that are doing some kind of cancer treatment, research, and the FDA, the government, did not approve of whatever they were working on, because maybe it only had a 69% success rate. And so maybe there was something going on, and and all of a sudden it just kind of surges up, because maybe they had some kind of good news or something, and it could have surged up 100%. But it typically always gaps down halfway. And so that's when you see it, shoot straight up, and then it shoots straight down. And then it kind of zigzags down right here. It almost kind of looks like a bullish pennant pattern. So that's why it's very important to not to be confused. The idea is to wait until it picks a direction. And at this point right here, the moving averages is either going to provide you your buying signal or your selling signal. If it goes down, if it touches this entry part here, that means it's just going to keep going down the rest of the way. So you might as well buy a put if it has that capability, and profit from it. Or if it decides to go up, this thing could keep going up quite a bit. This thing could just be getting started. So if it goes here, it's going to keep going up the rest of the days. And so that's where you definitely want to play things very smart and accordingly to this, as well as most importantly, the moving averages. So if you don't have these, I will share these in our chat room and our groups. That way you'll have them here after our meeting. But I highly recommend that you print this out, look at it daily, put it on your wall, do whatever you have to do to look at it until you have it memorized. Memorize every single name of them and what they look like, because all of a sudden, you'll start to identify them where before you never did. It's kind of funny. It's like seeing a new model, like a brand new car that was redesigned or whatever, but it's been out for 5 years, but you just saw it now, and now that you've seen it for the first time, you see it all over the road. And so it's kind of the same thing. So you just have to really look at this regularly. Now, another thing that really helps make a trader and investor very, very successful is rules. we have to be able to set a several amount of very strict rules that we must never break. And so I'm going to pull up another image on that we can use as an example. That is very, these are day trading rules, but they're very, very common for many different types of investors and traders. And so rule number one, always try to find or trade something that has a lot of volume. Have some kind of limit, at least 1 million in average daily volume, or if it's option volume, it could be 10,000 or 100,000 or whatever, million. But then we have the a price limit. Try to trade stocks that, like I wouldn't want to trade stocks under $1. I would at least do $5 or $10. But if it's a stock option, it's got to be at least I would say $20 or more, $30 or more, for specific reasons. But it's definitely not under $1. And the reason why I say that is because a stock that's under $1 is now in violation of the stock market rules. Because to be listed with the stock market system, you have to maintain your stock value of at least $1 or more. Otherwise, you're at risk of getting delisted. And as an investor, holding a stock getting delisted is not pretty, because then you're going to lose 50% a day until you sell it. And so, like I said, if you keep holding that thing, it's just going to disintegrate into dust. And so, and that's why you just don't want to, if you're a day trader and you're trading stocks under $1, that's fine, because you're getting in and out. You're not at risk of them delisting the stock overnight. So, but also to look at things that are maybe doing a percentage change, which if a stock is, doing moving averages and starting to go up or down, it's forming a new percentage change. We just want to be able to see and know what things are doing as it's happening, as well as before it's happening, not after it just happened. So, percentage change, though, sometimes you can watch things and maybe it may be up 5%, 10% for the day, or maybe it could be for the week or the month. It just depends on what style and what stocks that you're looking at. Rule number 2, day trade only, no swing trading. And the reason why that is for this, set of rules is because day traders get in and they get out, because they don't always know exactly what the next next day is going to do or what it's going to be like. And so they'll just wait and sit back and relax and wait for the next day to be like whether it's up or down. Because what they'll do is they'll kind of sit back and wait for these buying and selling signals. They'll get in and get out really quick, and they may do that once or twice or 3 times or maybe more every day. And so and that's why they don't want to do swing trading. They don't want to risk what the next day will what could it be like. They just will just kind of wait, be patient, and be more like a sniper or something. So, but rule number 3 is trade stocks with news, press release, and etc. Something that's creating a lot of activity, something that's being promoted or manipulated or whatever, something that's creating a lot of movement, a lot of volatility. That's what we want, to be able to see these good buying and selling signals with great swings. That way we can profit as much as we can from them. And that's why we're always talking about these kind of stocks on a daily basis, as well as the stock options. It's very important that we all kind of work together as a team, because it just makes us highly effective. So rule number 4, volume of the day as stocks, as well as high market cap company stocks. And like Apple, Facebook, Microsoft, and so on. These are all kind of in that category, especially because they're the algorithms. They only move like 1, 2, 3%, maybe 5% a day. So the movements are much easier to identify. They're easier than a penny stock, because a penny stock can surge straight up and it can plunge straight down. And where these type of high volume and high market cap companies, they don't move quite like that. They're a lot smoother. And but if we maximize the options with calls and puts with these types of stocks, 1% could be 50% gain or 50% loss. And so there's a lot of situations, which we'll get into later, is straddling, where you can only lose what you put into one side, but your gains on the other side are potentially unlimited. So if you lose everything you have on one side, but let's say your gains are 200 or 500% on the other, did you really lose anything? No, you gained a tremendous amount. And so that's why we don't always have to worry about if the next day is going to be up or next day is going to be down, because we can now profit from either scenario. So that's why it's really important that we need to focus on these high volume stocks and stock options and high market cap companies. Rule number 5, enter at midpoint of support and resistance. That is basically the moving average lines and stuff. So these are our buying and selling signals, the ones that we were talking about earlier. So rule number 6, always use a limit buy and a limit sell. When you're doing stock options, it's by default. You can't do a market buy or market sell. But when you're buying shares, it always defaults to a market buy and a market sell. Now, the difference between the two is that a market buy, you're telling the system to buy any price, even if it's at a higher price than you anticipated. If you do a market sell, you're telling the system to sell at any price, even if it's at a lower price, but you're telling the system to buy or sell it instantly right then and there. That's the only advantage, is that it's instant. But it's more, it's really not in your favor compared to doing as a limit buy or limit sell. You're telling the system to buy at a particular price or lower, whichever is in your favor. Or if you're doing a limit sell, you're telling the system to sell at a limit or a particular price or higher, whichever is in your favor. Now, a lot of times, it does take time to put your settings in and the price and to send it out. It could have taken you 5 seconds or 10 seconds. Maybe you're distracted and it took you 20 seconds. The price is still moving. It's not waiting on you. So the price may have passed your limit price, and so your order may or may not execute because because of the price change. And so you'll have to go back in. You have to either replace it, modify it, or cancel it and start over. In the meantime, the price is still going the other direction that might not be in your favor. And so then you have to go back in there and readjust, or maybe you'll have to wait. So the best way to try to prevent that delay is when you do a limit buy, maybe put the price maybe a couple pennies, 1, 2, 3 pennies higher. That way, by the time you send the order out, that the price has already kind of, you're just kind of making that adjustment just in case if the price went a little higher than by the time you sent the order out. And so, but it doesn't mean that the order is going to execute at that price. It could still be much lower than that. It's just whatever it is at the time. Same thing with the sell price. By the time you send the limit sell price, you just have to, make sure that it executes. Otherwise, you'll have to, readjust it. And that's why it's important when you do the sell limit, put the sell price maybe 1, 2, or 3 pennies lower than what you would normally. That way, you're ensuring that these orders are most likely going to execute. Rule number 7 is the ABCD pattern. Try to always enter at the C point. I'm going to show you, if you're not already familiar with that, on what that means and how to utilize it. This is the ABCD pattern, though it's more or less on a timing rather than more of a look of a pattern, though this pattern that we're seeing looks more like the bullish pennant pattern. Now, this is typically something that happens throughout the day. So if you're a day trader, this is very common where during the morning when the stock market opens, after about 15 minutes, the stock price is at a higher point where the stock breaks out and sets an intraday high point. After 15 minutes, then the stock price pulls back and sets an intraday low point. So it's been about 30 minutes usually at this point. Then usually within the next 30 minutes, the volume and the volatility start to mellow out, because the first hour and the last hour of every day is very volatile. It's very active. There's a lot of volume. But then, throughout after that, then it begins to slow down a little bit, where the stock sets a higher low and then begins to turn. So we have a timing, as well as a pattern showing kind of maybe a possible bullish pennant pattern, letting us know that the stock price is most likely going to go up for quite a while. And your moving averages have provided you a buying signal to buy in right now, because it's going to go up. It's going to, with this. Now, typically this can happen usually within the first hour, but usually it can be within 45 minutes to maybe an hour and 15 minutes. But it can be the reverse scenario, whether maybe the stock price is, maybe the whole stock market is down, and the stock market opens up. The stock is trying to recover. People are trying to profit. Now, there's nothing wrong with maybe trying to get in, get out really quick, but that's just more advanced. That's more of an advanced level. We can still profit from it, but the ABCD pattern, always enter at the C point, is trying to say this is kind of the most safest, most calmest area to try to watch for an entry point, is to wait until all the volatility is out of the way, and that way we can know exactly which direction the stock is going to go for the majority of the day. And so just know that the 1 hour is usually kind of the the magic number for that. And so let's go back to the rules here. I'm going to switch the image. So rules right here, that was rule number 7, ABCD pattern, enter at the C point. And then rule number 8 is the sell 50% of the position at a target goal. Now, it's not really a day trading rule. That's more of a long-term investor rule. I'll see a lot of times a long-term investor will buy into a particular stock, and it does something very, very well for them, and they'll sell a certain point where maybe they sold what they originally put into it, dollar-wise, and so now they feel that whatever they have left in there is like free money, and so then they'll put maybe what they took out, maybe put in something else, and just keep doing that again. Where number 9, it says beware of the false breakouts, sell right below the support level. Now, and that's something that we've talked about, you seeing that with moving averages, but also patterns and things like that. But also rule number 10, always have some kind of stop loss, no matter what it is. Don't be that person where you're on social media and you're down 50% or 75%. You're saying, what should I do? Should I sell or should I hold? And anybody think it might go up or whatever. They obviously did not have a system. When if they did, it would have told them what to do a long time ago, and they would have saved a lot of money and a lot of time, because there's things happening every day. There's a lot of great opportunities we don't want to miss. And so you don't want to be one of those bag holders and holding on to stuff. Might as well just cut your loss, get into something else, because another boat's going to go right by and you're going to miss a great opportunity. So always ride winners, at least 5, 10%, 20% or whatever. Just wait until hold on until it provides you your time to sell. And so it's just, there's a lot more other rules that we can over time that we just add into it. And so, but it's just really important that you have them, whether you have them memorized in your head or you write them down and look at them and just say, these are my rules. This is what helps me maintain my gains consistently and to minimize my losses. And so, but another thing that is important is to know the difference between an amateur trader and a professional trader. Because otherwise, if you don't know, then you're at risk of making a lot of mistakes. And so, just like growing up as a child, we had our parents or a coach, whatever, just provide us, what is wrong and what's right. And so, this is what's wrong and what's right when it comes to trading. Where an amateur trader will let losers run and hope they turn around. And there's that word hope again. I call it the hope system. They're throwing money at something, hoping that it sticks. And usually in the summertime, a lot of new traders and investors, they'll get lucky, but that luck will run out because every season has a different characteristic within the stock market. We are entering the winter season, which is the bearish season of the year, where most stocks are down a lot. And so at the end of the winter time is what, sometime in the middle of March. That is when we'll start to begin to see a transition from as we go into the springtime. We're going to see a transition from seeing bearish characteristics going more into bullish characteristics until we go into the summertime. Then it's bullish mode after that, or most of every day, the stock market usually opens up in the green. And so, but we definitely do not want to use the hope system, because, things are always changing and things are always different. So we have to have a system that's that can adapt to any situation. And that's why it's important to master moving averages and patterns, because it's the same thing year after year, day after day. Professional traders cut losers when a stop is reached and a trade idea is invalid. So we talked about that, when what stop losses as well as trade ideas of what they look like when they're good or bad, and so it's just really important to just know this stuff, and because this is your Bible, this is what we have to live off of and to go by, because this is what's going to help you guys become very, very, very wealthy, and you'll reach $1 million very, very easily if you practice all this stuff. So amateur traders will close winners too early because of fear of giving back profits, and so maybe they got beat up a little bit, with some stocks, and now they got into something that's really good, like maybe let's say AMC or whatever, and now they sold, and it's still shooting up or whatever, and so they're just, because they're scared, because of their emotions, and that's why we got to keep our emotions out, because their emotions will affect your buying and selling decisions. So we got to think statistically, analytically, and strategically. Professional traders will let winners run until profit order or when clear signs are given to exit. Trust their system. The system is utilizing moving averages and patterns. You have to trust it. You have to be confident of it, and because otherwise, if you're not confident, things aren't going to work out. You're going to be one of those that was like, I was scared and I wasn't sure what to do, and there's this old saying that professional traders say is, scared money doesn't make money. And if you're scared, then maybe this isn't for you, but you have to get that emotion out. You flip it off like a light switch or like a faucet. Just turn that emotion off and think like a robot. Think what this whole process of buying and you're selling signals, and just go off of that. Experiment with it or whatever, but build the confidence that you need to make this work. Amateur traders change their trading system after a few losing trades, because they're just trying to experiment. They just don't know exactly. And a lot of times these guys will go on YouTube, listening to a bunch of YouTubers. Well, be careful with that. YouTube is a great place to get a lot of information, but YouTubers will say anything to get a YouTube view and for you to click on their to subscribe. Intelligent information, people don't find highly intelligent information really important, because maybe they don't understand it, and that's one of the reasons why you guys are here, is because you're all highly intelligent. You just need intelligent information, because we're not getting this off of a normal YouTuber or maybe out of a book. We're getting this from real experience, from a successful investor and a trader. And so this is just what works, and this is what, and a lot of you guys are maybe new here today. A lot of you guys have been here for several weeks, and a lot of you guys just made $5,000 or $10,000, $15,000 or $20,000 in the last week or two. And so this is working, and so and that's why it's important that professional traders stick to their rules religiously and think process oriented. You think like a machine. You are a ninja, whereas an amateur trader will close their trades, never look at them, and avoid a learning effect. They'll be one of those people on Facebook that'll say, hey, I got $1,000, what should I put it on? And then a lot of people are just throwing them a bunch of ideas, which some of them could be great ideas, some of them could be bad ideas or neutral ideas, whatever, but they're just random though, and that's not good. Where professional traders will analyze their past performance, keep a trading journal, and learn from their past behavior, as well as maybe learn from other people's activity or from their mistakes. analyzing like your past performance, you can also identify that, maybe only trading one stock is all you need, because as you learn about a particular stock, let's say Apple, for example, you're learning its algorithm, like its personality. You're learning learning about somebody of how what makes them laugh, what makes them upset. Their personality, their characteristics. The stock is the same way, and so that way you can be a better trader, with that. And so that way you don't really have to keep finding different stocks or options or whatever. But it just depends, and you just have to analyze things until you get it to work for yourself. Where an amateur trader will overtrade and sometimes revenge trade and hope to make a lot of money fast. Now, there's nothing wrong with making a lot of money fast. You definitely don't want to do a revenge trade, because a revenge trade has to do with emotion. Now, your emotions are getting the best of you, and you don't want to do that. That's against the rules. You feel like you want to get revenge or anything, you got to stop instantly, right then and there, until you get that right out. And hope to make a lot of money fast. Again, there's nothing wrong with making a lot of money fast. You just don't want to use the hope system to do it. Professional traders are aware of their emotional impacts and know how to identify and manage their impulsive buying and selling decisions. Again, keep the emotions out, think statistically, analytically, and strategically. Amateur traders open their trading platform and then desperately try to find random trade entries.
Watch where you go,
Or a professional trader will keep a trading plan and plan their trading day ahead. Follow a structured approach, which leads us to the next thing. If you're not sure exactly how we can look ahead and to create a trading plan, we're going to go over that next. But just know that Benjamin Franklin once said, if you fail to plan, you're planning to fail. And that's why it's really, really important as an investor and a trader, especially a day trader, a swing trader, that we always know what is going to happen before it happens. And so the first thing we always have to look into is economic reports. And so I'm going to pull up the web browser right now for that. But the reason why economic reports are so important is because they have the biggest impact on the entire United States stock market system. Not a particular stock, not a segment of the stock market, the entire stock market system. So that is, however, international news can override that that international issues, or like if there was a war or something, something big, maybe a country went on a big lockdown or whatever, which I think we're going to see a lot of here pretty soon. That can override a lot of the economic reports characteristics, but economic reports do have a major impact on the stock market, which happens regularly, almost on a daily basis. That's got to be one of the things that you all have to master. Now, we're looking at the investing.com website. That's where we normally get our economic reports. I've seen economic reports on many different platforms and websites and whatnot, but investing.com seems to be very, very user-friendly, and it seems very, very instantaneous, and it's free. It doesn't cost anything. Now, we were looking at the U.S. futures right before the beginning of our meeting. They were opened up kind of in the green. Basically, they were kind of carried over from the Friday before close during the after hours, but we can now see that the U.S. futures has plunged. We can see that the NASDAQ U.S. futures right now. Now, it's only been 1 hour after the U.S. futures have started, and today again is Sunday the 19th in December 2021. It has plunged more than 0.5%. Same thing with the S&P 500, and the Dow Jones is down 0.5% right now, and it could still be going. And because, like I said, it was the complete opposite an hour ago. So it's down 1% on all of them in the last hour. So not looking good for the tomorrow morning for I guess you could say the bulls, but this is going to provide a lot of bearish activity. But so let's focus on the economic reports. Investing.com is a great app that you can download from your app store. It's also a great website that you can utilize too. That provides a lot of great information. The US futures are all live and it updates instantaneous. You don't have to go to some other website that or app that only updates maybe every 15 minutes. You can get that stuff instantaneous. But economic calendar is right here. If you download the application, it's a calendar button on the bottom of your screen. You would click on that and just make sure you have the economic calendar clicked on. And so once you have the economic calendar on there, you'll want to click on filters because we need to kind of configure everything that we need to see by clicking on clear. So just clear everything out of there. There's only two things we need to have highlighted, and that's the United States. And down over here under importance, we have 1 star, 2 stars, and 3 stars. We want to put a check mark under 3 stars because we're telling this system that we want to see everything that'll have the biggest impact on the United States stock market system. Once you have those two things selected, click apply, and then we'll have our report right here. So we'll want to click on this week. That way it'll pull everything up. Now this is a holiday week, which just that alone creates bearish characteristics. Now there's going to be a lot the media is already pouring fuel on the fire, making it even more bearish. So, but that could create a lot of volatility. We can easily see things plunge down, and then we could easily see things surge right back up. And that's where I think this week, straddling both calls and puts are going to be in our favor, and it's going to be like an insurance play. And so that's why it's really important, because there's going to be a massive volatility. But I think mostly we're going to see bearish characteristics. So we don't see anything scheduled for Monday or Tuesday, but it's important to always look at this every day throughout the day, because they could easily add new schedules to it. Maybe they change the time, but also you'll see the results, or maybe there's no forecast. And because maybe they're still trying to figure out what they should forecast amount put on there, or their target range, or whatever. So that's why it's important to always, to watch this because of any changes. So normally there's no economic reports on a Monday or Tuesday. If there is, that's kind of unusual, but it's nice because it just creates more volatility. But normally there's economic reports on a Tuesday, Wednesday, and a Thursday, but there isn't one on a Tuesday of this week. So that means it's pretty much left up to investors, Wall Street, and the politicians and the news media companies. So there's really nothing to really kind of go off of when it comes to economic reports for those days. So those are going to be kind of like a wild cards. It's going to be a pretty wild Monday, and it's probably going to be a wild Tuesday, which we'll get into more on Tuesday, because there's some crazy things that are going to happen on Tuesday. But Monday, typically investors like to come back on a Monday morning to invest over the weekend, because maybe they pulled out on Friday, or maybe they sold a bunch of cryptocurrency and they're ready to pump up some stocks. But it looks like so far with the U.S. futures, things Monday morning is going to be down. But bad news is great news. It just depends on how we utilize this information. We just need to make sure we can buy on the dip, and we can buy calls or whatever, buy your shares, and just focus on those moving averages. So hopefully you guys have some good buying power for these massive dips. Especially with the puts that we have, we need to make sure we sell those on a good selling signal, which would be a normal buy signal, and then we need to switch those to calls. And because it just depends on how far this dip is going to be early in the morning after the stock market opens up. Things could easily bounce or have a good bounce where we can profit a lot, and so we definitely want to take advantage of that and the rest of the situation, because these politicians, and the news media companies, they're all in on it. This is all just something that that they do to try to make a lot of volatility, so that way people can make some good gains. You just got to know you can't bullshit a bullshitter, so you just got to know what they're doing and to try to profit from it. And so yeah, Monday, Tuesday, nothing's really there other than a few earning releases. But Wednesday looks like obviously is when the economic reports start to begin. Now, if we're looking at it on the website, we have it the times here, which are based on Eastern time. So it all depends on your time zone. You have to kind of do the math to make sure that you're going to focus on this based on your time. But if you're looking at this on the app on your phone or tablet, these times will now be based on your time zone. But the website is definitely based on Eastern time. So the first economic report is released at 8:30 in the morning, which is 1 hour before the stock market opens on Wednesday, December 22nd. We have the GDP report, which is a quarterly report for the third quarter. Now, the previous report, the second quarter, was at 2.1%, and it's still forecast to be at 2.1%, so about the same thing. Now, if you're not sure what these are, you can click on them. A new tab will appear on your application. A little thing will appear where you can now begin to read the little small paragraph, letting you know what it is and how it will affect the stock market. The GDP is your gross domestic product that measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. It is the broadest measure of the economic activity and a primary indicator of the economy's health. We all know that the inflation has definitely went up, definitely probably more than 2.1%. I would say probably 2.5 or whatever, and so the bar may be set low, and so we may see where Tuesday or Monday and Tuesday are said to be very bearish days, and this Wednesday may be the recovering day, because especially when there's a report that is revealed during pre-market, that helps momentum, because now we have a before the stock market opens, after the stock market opens. So this report is 30 minutes after the stock market opens. We have the CB consumer confidence report for the month of December. And so the previous report for the month of November was 109.5, and they're expecting it to be a little higher at 110.2. Again, if you're not sure what this is, we can always click on it just to view what exactly the CB consumer confidence is. Basically your confidence board that measures the level of the consumer confidence in the economic activity. Is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher readings point to a higher consumer optimism. A higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. So basically, with this report, as long as it can meet or beat the previous report, we're fine. If it can meet or beat the forecast report, we're even better. We're all good, and so, rock on. At the same time, we have the existing home sales report. This is used houses or homes or whatever, existing homes. So now we have a double whammy. 30 minutes after the stock market opens, more momentum, more great, bearish, not bearish, bullish, positive momentum. So the previous report was 6.34 million used homes. And so the forecast report is 6.5 million. So the thing with the fourth quarter for buying homes is that a lot of times people are trying to buy their homes before the holidays. That way they can have their holidays in their new home. But also we have the same thing that, or another thing that we that it doesn't normally have is a race for people to try to either refinance their home or to buy a home before the government starts to increase interest rates. So we may see a surge in more activity in home sales. And so, but again, as long as it can meet or beat the previous report, we're good. If it can meet or beat the forecast report, we're even better. But we could see it can reach 7 million, maybe 7.25 million. And so, but I think either way, however, one could end up good, one could end up bad. So in that case, they can kind of cancel each other out. Maybe it won't provide any signals. Maybe it might provide mixed signals, where now different parts of the stock market may provide buying signals or selling signals, uptrends and downtrends. So then the next report is the crude oil inventories. This is our oil inventory levels, where this report is scheduled to be released 1 hour after the stock market opens. After that, that's it. There's no further economic reports that are going to help manipulate the stock market for Wednesday. But that's quite a bit, all within a 2-hour period. This is a lot of great, which looks like to me some very great bullish characteristics for Wednesday. But come Monday, Tuesday, watch out, because most likely those days are going to be in the red. And just make sure you play your cards right, because we can make a lot of money this week. And so we just got to do it the right way. And so Thursday, we have the core durable goods order for month over month of November, which is scheduled to be released 1 hour before the stock market opens. Now, the previous report for the month of October was about 0.5%. They're forecasting it to be about 0.6% for the month of November, a little bit good, and which is to be expected as we get closer to the holidays. The durable goods orders are basically increased naturally anyways due to demand. And so I would definitely expect this should meet or beat the previous, if not the forecast amount as well. The next report at the same time, 1 hour before the stock market opens, is the unemployment report, which they call the initial jobless claims report. Now, the previous report, as I had mentioned before, because it was really low before, it was like, what was it, 195,000. And I mentioned that normally when it gets really low like that, at any point in time, it usually bounces, and it did. And I was kind of surprised anyways, because as we get closer to the holidays, you would think that it would have gotten lower. But that's why you do not want to stay optimistic. Keep the emotions out, your little feelings out, and think logically. And logically, it bounces, and that's what it did. And so now it's time for it to go down. And so where the forecast amount, they're thinking that it's going to be about 205,000. I think it's going to reach probably 199, 100, maybe 190, 180, 85, or whatever. Well, I think we should see some pretty good numbers. Now, most of the time, we need to see these numbers up, but usually there's a couple of things that we need to see down, like the crude oil inventories. The lower this number is, the better. Or if it's higher, then that means people aren't driving as much, they're not buying as much gas or oil or shopping and doing things to help the economy. But if the crude oil inventory numbers are down, then people are driving and spending money shopping, as well as the unemployment report. If people are at work or have jobs and working, this and not filing for unemployment, this number is going to be lower, and more people are going to be paying taxes, they're going to be shopping, it's going to help the economy. And that's where there's a couple of these reports where we need to see these numbers down. But most of them, we need to see them up. And so the next report is the new home sales report. So on Thursday at 10 Eastern time, that's 30 minutes after the stock market opens, the new home sales report is forecast to be at 770,000 brand new homes and sales, though, not being built or anything, but sold, signed, sealed, delivered. And where the previous report for the month of October was about 745,000. So they definitely believe it's going to be quite a bit higher than that. So, but as long as it can meet or beat the previous, we should be good. But if it can meet the forecast amount, we're even better. So we're going to see a lot of bullish characteristics on that morning. But we can easily see that Thursday can begin to fall as we get closer through the holiday weekend. So it's going to be a 3-day weekend. There's no trading on Friday. Friday is closed because it is Christmas Eve, and so just be careful. And the reason why a lot of investors don't want to hold throughout the weekend is because of uncertainty. They're not sure what's going to happen throughout the weekend. Anything can happen. A lot of international issues can happen. Especially with this, they could have lockdown, shutdown, whatever, between different countries, and they all kind of affect each other. So, but come Monday could be a massive amount of volatility, whether it's down or up. I highly recommend straddling, because straddling can be very, very effective through these types of situations. So no matter whether the market's up or down, bring it, because we'll be ready for it. So this is the economic reports, and you can always click ahead too, even the next following week, to see what is planned ahead. But this is going to be the New Year's week. And so, but we only see 2 economic reports for that week. So we will have to revisit this later, especially next weekend during our live meeting, because we'll see there'll be a lot more on here. So the next thing that's important to look at too, to be aware of, is the earnings reports. That way we're always aware of what's planned ahead and what could possibly happen. Because the pro traders and investors have this old saying, buy on rumor, sell on news. So if you're trying to buy on news, the stock price is already high, it's already up, whether it was, and it's basically too late. And so that is the time to sell, because you sell high and you buy low. And so it's always important to be aware of what's happening before it happens. That way you can make good, intelligent buying and selling decisions. So in our Facebook group, the Robinhood Stock Market Watchlist group, every post that I post is always saved in our featured or announcements section, as if it was like my own bookmarks, which is what I originally did when I created this group, several years ago. But so every Saturday, I'll post the top 10s this week's scheduled most anticipated earning releases. So, but it's going to be very light activity because the next couple of weeks are holiday weeks. But I was very surprised to see we have some pretty big names in here. The number one most anticipated companies is Micron Technologies. And then we have the Nike, Carnival Cruise, Blackberry, Rite Aid, Carmax, General Mills, Paychex, Blade Air Mobility, and Cintas. And so we can always click on it. You can always see the calendar for the schedule for this week, that we can kind of see, are they going to release that information before opening or after close. And so it's very, very, very informative. Now, followed by the top 10's analysis of that information will be posted right here, usually either Saturday evening or Sunday morning. And so we can see that Cintas is scheduled to release their earnings report on Wednesday morning before the stock market opens. And I also highlight a very important key part to this description, where the company's earnings release has a 65% expecting an earnings beat. Now, 65% is about average. For these, when you look at this regularly here, 65% is average. Any less than that's kind of below average. Any more than that is considered above average. Now, I'll also post within the picture a little bit of clues, because a picture can say 1,000 words. It can provide us clues of, if you're not sure what this company is, the image may be able to provide you some clues on what they are. And so obviously they're the uniform company or people where they provide, maybe uniforms and towels and stuff for, certain industries. And so, but this one here was new for me. Out of the 4 or 5 years that I've had this group and posting these regularly every single week, the Blade Air Mobility is the first one that I've ever seen on here and posted. So I'm not sure if they're a fairly new like IPO or something. There's not a whole lot of financial information about this company, but it is considered in the top 10. Now, Blade Air Mobility is also working on a lot of good, interesting technology like flying drones for people to fly in. So there could be something special going on with this company. But Blade is confirmed to reporting their earnings this week, Monday morning. So tomorrow morning, they will be revealing their earnings right before the stock market opens. The company's earnings release has a 45% expecting an earnings beat. So that's almost 50-50. I think investors just really aren't sure what's going on there because there really just isn't enough information. So we'll see what happens there. Paychecks right here, they're more of that kind of that online payroll company for to help out other businesses, but they're confirmed to release their earnings Wednesday morning before the stock market opens. The company's earning release has a 60% expecting an earnings beat, just slightly below average, especially as I think a lot of businesses are kind of getting away from some of these pandemic stocks. I think they may be losing some of the revenue and stuff because companies, as they're trying to pay more for people, they need to try to find ways to cut costs and be more effective in other areas. So we'll see what happens there. General Mills is scheduled to release their earnings report Tuesday morning before the stock market opens. The company's earning release has a 67% expecting an earnings beat. Now again, these earnings report, we have to always remind ourselves, these are for the third quarter. Not the fourth quarter, even though we're in the fourth quarter, even towards the end of the fourth quarter, these are all third quarter earnings report, which is between the months of July, August, and September. So this is the summertime earnings. So, which food is a pretty big thing. And so General Mills, very well-known company, we can see within the image here of all these companies that they own. It's just not one brand. They own all this stuff, so that's huge. And so Carmax is right here. Carmax is scheduled to release their earnings report on Wednesday morning before the stock market opens. The company earnings release has a 48% expecting an earnings beat. Now, even though the automotive industry is definitely struggling because of the shortage, because there's definitely a high demand with a short supply, but even though they may not be selling as many vehicles, but they may be profiting more. So their revenue, they may beat their revenue. So just be aware of that. Rite Aid is scheduled to release their earnings report Tuesday morning before the stock market opens. The company's earning release has a 75% expecting an earnings beat, which 75%, I think it's one of the highest percentage chances of the odds of it beating its earnings for this entire week. Rite Aid, we all know Rite Aid very well, and it's been it's been very busy. And so the next one is Blackberry, which we've been very well known for their phones, which we were really hoping that they were going to get back in the cell phone business earlier this year. I think that ended up being a flop. I don't know what happened, but that would have helped them out a lot because all they are right now is really like a security software program. And I think for businesses and companies and for the government. And so, it was very disappointing that they postponed or discontinued their other bits of technology. But The Blackberry is expected to release their earnings report on Tuesday after the stock market closes. The company earning release has a 58% expecting an earnings beat, just slightly below average. Carnival Cruise is expected to release their earnings Monday. Confirmed to report their earnings before the market opens. So tomorrow morning, this is going to be very active. This is probably going to be on the top pre-market activity. And so it's going to be very interesting to see what happens. But the company's earnings release only has a 42% expected earnings beat. So it's not sure if they really, a lot of people feel that, a Carnival cruise ship is something that they want to do. So 42%, not good for Carnival. And then we have Nike. Nike is scheduled to release their earnings report Monday after the stock market closes. The company's earnings release has a 63% expecting an earnings beat. A little bit of below average, but again, this is the third quarter during the summertime. I'm not sure when people usually buy their athletic clothing and whatnot, but it does seem to be a little lower than average. There's did I not save here? There was one more, the Micron. Must not have. Let me get on my phone here really quick, and I'll see if I can pin it to the top here, because there was a very, very important one that we really need on here, and that's the Micron. Micron is basically the is going to be huge. It's going to have a lot of. Let's try to pin it to features. Okay, so I'm going to refresh this, and then we should see it here. Just somehow forgot to pin it, I guess. There we go. So Micron right here, obviously, as we were talking about shortages, there's definitely a shortage in rare earth materials, as well as microchips and metal materials. And so, but things have been improving throughout the year. And so we're getting more access to more materials and whatnot, and producing more chips as we're expanding the companies and production. Micron Technologies is confirmed to release their earnings report Monday after the stock market closes. That's tomorrow after close. The company's earnings release has a 73% expecting an earnings beat. So far, those are the two companies that have the highest percentage odds of beating their earnings, is Rite Aid and Micron. And so these are going to have a lot of attention. And so especially Micron. And so both of them have, again, at 65% is our normal average percentage. Both of these have are way above average. So it's very rare do you see something that's 70%, let alone 80%. So yeah, very, very good to be aware of. And so there's some other bits of information that's also good to look at when we're researching or doing our due diligence throughout the weekend. We need to research stock options. Whether if you're into stock options or not, it's still highly valuable information to look at, because the pros have this another old saying that they say, follow the money. You don't really want to follow somebody on Facebook that's saying, hey, it's time to buy this or time to buy that, because maybe they're just manipulating it. Maybe they're holding it, or they want you to buy into it to help, pump it up or whatever. The best way to follow the money is to really see where the money's going. And so if we go to this website called barchart.com, it's free, doesn't cost anything. It has a lot of great information, but we're using options right now. So we'll click on options. The first thing we want to look at is the most active options. So by clicking on it, again, as we're looking at this during the weekend, this is basically Friday's information right at closing. So Apple basically dominated the list. They were number one, and they had 2.2 million in options volume, which is huge, which is almost twice the amount of the AMC and more than twice the amount of Tesla. Now, when we look at this information daily, we can normally see what's normally on here and what's not normally on here. Now, the reason why we see what we see that's normally on here day after day is because it's a very popular stock option that people like to trade because it has a very smooth algorithm, or maybe it maintains its value, but it's just very, very common and very popular for several reasons. But when you see a stock that's not normally on here, we got to consider that unusual activity, because there's a reason why it's not normally on here, and now all of a sudden it is, because there's a lot of volatility, there's a lot of volume, there's a lot of activity going on because something's happening. Like AMC, for example. AMC is not normally on this list. It's usually on the very bottom of this list. And now it's on the second of this list. It's on the very top of the list, and it passed Tesla, which is very rare. And AMC is up 19%, which is out of nowhere. It just did that, and it finished at almost at 1.4 million in options volume. Well, now we see these little percentage things on the side of these. Like, for example, Apple call ratio is at 67%, or the put ratio is at 32%. Basically, out of this amount of volume, which equals out a lot of millions and millions of dollars, 67% are betting that the stock's going to keep going up, whether it be that day or the next day. Or 32% is betting against the stock, betting that the stock's going to go down, whether it be that day or the next day. And then same thing with AMC. Out of this amount of activity, 34% is still betting against the stock. They're like, oh no, this thing's going to go down. It's reached at its highest point. It's going to go down. 66%, no, it's going to keep going up. And then Spider-Man just released their movie this weekend. There's all kinds of great news that's going on. Well, we knew that Spider-Man was scheduled to be released. Movie theater, these movies do have a big impact. Whether Disney releasing a Marvel movie or a Star Wars movie, or maybe it's something, or maybe it's a video game. Maybe there's going to be a new Call of Duty game that releases. Well, all of a sudden, I forget the name of the company, that Activision or whatever. Their stock goes up. And so we just always have to be aware of these scheduled, because this is what happens. And so this happened, before the Spider-Man movie came out. Now, there's a lot of, good things, good, media attention going on. So, AMC can easily probably go up another $5. So it'll probably reach, $35, and maybe another one on the next day or whatever. I mean, who knows? But we'll just have to really see, what happens. But good job, AMC, starting to kind of recover. And then Tesla is always on this list. It's usually number 2. It looks like they're kind of down a little bit from what they usually are. They're usually around $1,000 a share, but they look like they recovered right before close, about 0.6%. Normal volume. But their ratio is usually 50-50. This is normal, 56% call ratio, 45% put ratio. Normally when you see that, there could be a lot of straddling activity. So a lot of people buying both because Tesla can be very volatile. It can easily move 3, 4, 5% very, very quickly. AMD, 62% and so on. But again, we always want to try to look for things that are not normally on here, or maybe a very high percentage ratio in something like this right here. Very, very unusual. We have a 28% call ratio on Alibaba, which Alibaba was up 1.5% last Friday. However, we have almost a 72% put ratio, where people bought a lot of puts, saying this thing's going to go down on Monday. So they just massively bought a huge amount of puts on this thing, because most likely it probably will go down tomorrow morning. And so they're going to make a lot of money. And so this is where you can find out a lot of information of where people are putting their money. But this page here really summarizes overall what the entire options system is doing. But if we want to see more in depth, over here, as we click on options again, our options menu, we can click on the options volume leaders. When we click on that, the next page will then show us the most active individual calls and puts. And that way it will help provide us like a strike price, as well as the DTE, which is basically the number of days until that option expires. So, but when we're looking at this either on a Friday, Saturday, or Sunday, we're going to see some zeros right here, because that basically means it is now expired. It's no longer, it doesn't really apply to our weekend research. And so, but the most active individual call out of the entire option system is this Apple call strike price at $175. That expires this Friday, December 23rd. Now, this had a open interest of about 135,000, but now it has the volume of 118,000. Now, if you're kind of new to options, open interest is basically kind of like previous, it's like previous volume activity that's been accumulated. So this volume amount will then merge itself with the existing open interest, showing more interest activity with that particular stock option. Now, I usually like to see that the volume to exceed over the open interest. So I usually like to see, because it shows more unusual buying activity. If the volume is less than the open interest, I don't know if that could be all selling activity. Maybe it's 50-50. Maybe it's 50% of it's selling activity, the other 50% is buying activity. I don't really, I want to see a massive amount of buying activity, because it provides a massive amount of unusual activity on that. So, but I'm just not really seeing that there, even though I am seeing a lot of activity, but it could be just buying and selling activity. When it comes to options, I usually recommend buying at the money or in the money. So if the Apple price is currently at $171, I would buy a $170 call. So that way I'm at the money or in the money. Because because you don't lose a lot on time depreciation if the stock price isn't moving. But if you were, let's say you bought $175 call strike price and the stock price is sitting at 171, you're going to experience more time depreciation than you would if you were to buy the $170 call strike price. So again, it's all about trying to maximize your gains and minimize your profits. So it's all about maximizing your gains and minimizing your losses. So then we have a $177.50 call strike price, which is very odd, but we do see that the volume doesn't quite a bit exceed the open interest. So that is a good sign, even though it's much higher than the other strike price. But then we have another strike price here, which expires in 2 weeks at the end of this month of December 31st. The open interest and volume are right about the same, but we can definitely see a lot of Apple activity, some expired. AMC basically is the next one kind of on the list. We have a $29 and a $30 call strike price, though the $29 is now expired. So it looks like the $30 call strike price is the next one a lot of people were really focusing on going into this week. The open interest only had 5,000, and look at this. The volume is 43,000, which is a massive amount, 8 times the amount than what the activity previously was. So as we go down the list, now we have a put strike price betting against Apple, but it could be straddling activity, as like an insurance strategy. Now we have Intel right here with INTC with a $55 call strike price that expires almost a year from now in January 20th, 2023. So this could be insider information or insider activity, something that may be going on. I mean, who buys a stock option 399 days from now? However, maybe if you're a long-term investor, maybe you're not into stock options. You can look at this as a great way to invest long term or short term, because if it's $50 now, and if it goes to $55, that's a 10% gain. You may like that. That may be, that's good. And plus, it may happen well before this expiration or this amount of days. This can easily happen within a month or a couple months or half a year or whatever. But then again, this activity will change. They'll dump that. Then they'll maybe buy a $60 call with this expiration date, in 6 months from now. So we'll have that result depends. But there's just a lot of great information that we can look at into this. Look at this. So now we have BAC, that's Bank of America. Speaking of, so we were talking about interest rates and whatnot, previously. Now the government has last week had basically announced that they're going to have, they were going to have 2 interest hikes per year for the next 2 years. Well, they had some group of politicians was like, oh, that's not enough. We need to have 3. Let's all vote. And they voted. They'll have 3 interest rate hikes per year for the next 2 years. And so basically, it is the season of the banks. Wells Fargo, Bank of America, Chase, Capital One, all those stuff. These banks are going to make more revenue as we get into their earnings reports. As the interest rates start to increase, they're going to make more money, more revenue. So it's a bank season for the next several years. And so we may see a lot more activity on banks for a longer term. This is just for a week, so this is going to expire this week. But it's very interesting, though, that because it really didn't have hardly any interest, only had 6,000 open interest, and now all of a sudden 33,000 in volume activity. So a lot of people are starting to start betting on banks, because, like I said, we're going into bank season. Remember, buy on rumor, sell on news. Apple, AMC, we have Vail, 35 days that expires, so that's next month. We have a $17 call strike price with a share price that's at $14. So we can make easily profit from this either way, but then the open interest is only 42,000 and the volume is 28. I don't know if this is selling activity. This could all be people dumping this thing. So, but we really need to watch for the unusual buying activity, like these small open interest, large volume. So there's another area we could look at on the options menu. If we click on unusual options activity, it'll now try to pinpoint the stock options that have more or less the biggest gap between the open interest and the volume. So usually when I look at this, I'll try to find things that may have the volume of 20,000, 30,000, 40,000, something like that, because most of the open interest is really going to be nothing. So we have whatever this is. I have no idea what CPNG is, but they're currently at $29 with a $29 call strike price that expires this Friday. But this is pure, like 99% buying activity. Anything else? I don't really see anything major in this. Wait, what was that? Another 25. There's a Tesla call right here. That's expired, so that don't count. AMC. $25 put. A lot of people are also betting against it, as we were talking about AMC. But last but not least, we also need to look at the straddling activity. That way we are aware of that way we know if there's any unusual straddling activity. What are people doing? We always want to click on all 4, starting with the top one, short straddle. So what we want to look at is things that we see multiple of, multiple stock options. So I see 2 hoods. This is the Robinhood app, and we see we see 4 AMDs. So let's go to the next one. The long straddle. It don't matter. We need to look at all of them. Multiple of the same thing. I don't see anything really multiple of. Just 2 AMCs. We'll go to the third one. which is short strangle. Now, straddle and strangle are basically the same things, where you buy both calls and puts. Straddle is where you're buying the same strike price. You're buying the same strike price call and a put. The strangle is where you're buying the call and the put at different strike prices, but it's still the same concept. Where we're seeing Nike, we're seeing the Micron, which we were all talking about several minutes ago with the earnings reports. However, I do not recommend straddling or playing any kind of options through earnings, because earnings can easily provide your stock option what's called implied volatility crush, or IV crush. IV crush can instantly change the value of your calls or puts without hesitating. I mean, it just devalues it like it was nothing. Even though the stock may whatever it could have been in your favor, but it just devalues it. It just eats it up. It's crazy. It's unfair. But just know that options through earnings is terrible, and I do not recommend it. But it's usually best to just to play afterwards. That way we can take advantage of whatever the algorithm is doing afterwards. But it's still good to know what's going on, what people are doing, because there's a lot of activity on Micron Technologies. We can see a lot of the MUs right here. But then again, if Micron surges or plunges 10-20%, straddling might not be that bad. But if even though the IV crush may have a little bit of effect on it, but that such a big movement can really override the implied volatility crush. But when we're seeing where the majority is straddling Micron, there is probably a good reason for that. Micron may be the biggest movement for a earnings report for this week. So strangle here. We'll see if there's anything there. We see a lot of AMC. So AMC, as we saw last Friday, moved almost 20%. That's huge. That could be a massive amount of gains, whether it goes up 20% or down 20%. So obviously the big straddling players for last Friday going into Monday this week is Micron and AMC. It's definitely plain as day. It's very obvious. So we definitely, everything that we've talked about, those are great things we got to definitely put on our watch list. And then there's also a great website we can look at too that I use, NASDAQ. NASDAQ is another free website. Or you can type into Google, you can type in either the ticker name like AMC followed by NASDAQ most active options, and it'll pull up this report of the most active individual calls and puts for that particular stock option. So we can see with AMC on Friday, we have some calls here. This particular call, $26 call strike price, was up 982%, where most of the puts were down more than 99%. However, if you're straddling this thing, if you had 900, almost 1,000% on one and lost almost 99% on the other one, that 1,000% gain just easily washed out your loss on the other one and put you ahead tremendously. And look at this, open interest was only 9,400 and it had the volume of 24,000. I mean, this is huge. And so just very important, but let's take a look at Micron really quick. So all we got to do is really change the ticker code in the URL address at this point. So you can always be sure to bookmark it, just change the ticker code in the URL address that we can pull up that information. So I don't really see a whole lot of information, so it might not be a really good stock option or friendly stock option. So obviously I would say avoid Micron unless this is inactive information. But by looking at it, there's hardly any wait, am I on the right here? Might not not have it on the right ticker here. Yeah, MU. Wrong ticker. U. All right. Now we should see a lot more activity. There we go. That looks better. Okay, Micron right here. Okay, so what are we seeing? We're seeing a good blend. Look at the volume. 6, 4, 2, or 3, and then we have 6, 5, 5, 2, 3, whatever. And so, but then the top one being 7, so we definitely have a lot of calls there. But now some of these are going to be expired, especially if you see the value is 0.1. Obviously, this probably expired last Friday. So if you click on it, I wish NASDAQ would have left the expiration date on each one before they updated their website, but if you click on it, it'll tell you the expiration date on the next page, so that way you know for sure that's expired. But you can obviously tell that this expired worthless, and it's down to there. But definitely a great website to utilize and to really perfect everything that we've talked about, whether it's the moving averages, patterns, along with these resources will really help provide you what stocks to really look at, what stocks are becoming very active, and how to kind of go about that, because your goal ultimately is to become an independent and successful trader and investor. So that way you don't have to rely on anybody but yourself. Does anybody have any questions or want to go over anything really quick before we end this? I'll pull up the U.S. futures really quick that we can take a look. That we are definitely still in the red, about 0.5%. It was a little bit more than that a little bit ago, but it's kind of still around the 0.5% range area. Now China, I'll flip over to the Webull app. Now Webull can provide you some activity information on the world markets, so that's where we can kind of watch the Asian markets and kind of see what's going on over there. I believe the Asian markets will begin here in about 30 minutes. So we'll be keeping an eye on them and kind of seeing what they're doing. And then the markets in India will begin, I think about 2 hours after, about maybe 2.5 hours after the Asian markets begin. And then the European markets will start typically in about 6 to 7 hours from now. So we'll have to kind of watch the U.S. futures and everything, kind of see what our market is going to do and look like. But it looks like so far that we should expect some pretty bearish characteristics. I would say the next 2 days, and then Wednesday and Thursday look like it could be some pretty good volatility with some possible bullish characteristics. And but Thursday followed by before close, there could be a lot of uncertainty, so we can easily see the market go in the red right before close, going into a 3-day weekend. So you guys just be safe, be careful, make good choices. Let's stay focused. Let's make a lot of money. Let's stay in touch in our chat room, and we're gonna do a really good this week. So hopefully this information has provided you guys some good information. We'll do it again next week. If you guys ever have any questions or comments, feel free to message me on Facebook Messenger. Thank you guys very much. We'll see you again next weekend. Yeah, we'll see you tomorrow as well.